could argue these tech companies are so powerful because they know how to invent and then reinvent and then reinvent again. And yes, in some cases, copy their competitors and come out on top if they come up with something better. You could argue that their scale gives them a huge unfair advantage. From a stock picking perspective, it's the same thing. Most of all, they've proven that they'll never let a crisis go to waste. Listen to these spectacular numbers. Amazon made nearly $89 billion in revenue. Street was looking for $81.5 billion. That's how you translate into a gargantuan $10.30 of earnings per share. Analysts were looking for $1.46. And they weren't even trying to have an incredibly profitable quarter. They spent aggressively to build capacity for the stay-at-home economy and to keep their employees safe. Billions of dollars in that. As for the next quarter, Amazon gave a blowout forecast. Stock's on fire. All right, how about Apple? All right, this is another blockbuster set of numbers. They did $59.7 billion in revenue. People were looking for about 51. $7.5 billion more than the analysts expected. They did, along with a 51-cent earnings beat off of $2.07 space. This is the largest company in the world, people. iPhones, iPads, Macs, the service revenue stream, accessories, all stronger than expected. iPhone numbers were truly magnificent. People were worried that they wouldn't sell this quarter because of the lockdown. Instead, they did $26 billion in sales. Wall Street was looking for $22 billion. And while Apple didn't give us a forecast for the next quarter, they did give us something that I know is truly regarded as leisure demand by some people, let's just say, but I think is important. They gave us a 4-for-1 stock split, which should make this one a lot more enticing to home gamers who might be scared away from a $4 price target. Many other companies should actually watch what Tim Cook does here and stop watching what Warren Buffett does. Do what Tim Cook does. It's another reason why Apple's zooming after hours. You know me, I haven't changed my mantra. I say, Apple, own it, don't trade it. That's like my middle name these days, okay? Own it, don't trade is my middle name. Facebook. After all the sturm and drang about major advertisers boycotting the platform, Facebook shot the lights out, as I told you that they would. Big revenue beat with sales up 11% year over year. Enormous 41-cent earnings beat off a $1.39 basis. Daily average users up 12%. That is stunning. Even better, July is going strong. Millions of small businesses need Facebook. Instagram Shops is a gigantic hit. This is a small and medium-sized business juggernaut. No wonder the stock's flying in after-hours trading. They create a lot more companies than the SBA does. Alphabet's more tricky. Numbers were substantially better than expected, even as their core advertising business took a major hit. Still, YouTube managed to grow by 6%. The phenomenal Google Cloud, that was that Thomas Curry I told you about, up 43%. Stock barely budged in response, but I think that's because Alphabet's management is so non-promotional. No, they're worse. They are anti-promotional. They should go work at Moderna. Put it all together, and 3 of the 4 companies that Congress grilled yesterday just reported unambiguously fabulous quarters that have sent their stocks in the stratosphere. The 4th one did pretty darn well, even if its stock only rallied a little. If I were out there on the conference call, believe me, I would be a little more, let's say, aggressive. Talk about an incredible track record.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.